All right, let's begin. So FEMA, Foreign Exchange Management Act, some 46 pages of material they've given. Let's decode it and make it simple as usual. So let's do that to make it as easy as possible. So I will do it from this, right? And whenever you want, I will make it's anyway full screen. You can take a picture. I'll tell you to take a picture. You can take a picture. No problem whatsoever. Great. So let's see. First and foremost, buddy. So in FEMA, there are only some 6 sections for your syllabus, CA Inter. We will dissect it properly. We have 3 hours with us. I'll give you a break also. And you cannot say that I am tired and all that, because I took a class from morning 7 a.m. till now 6 p.m. And now again 3 hours I'm taking. So when I can do it, you guys are way younger than me. I'm sure you can also do it. No watching match and all in between. Decently concentrate. Yes. PDF, this, you can take a picture, man. You can take pictures of this. I'll give you time. That time I'll tell you to take a picture, then you please take a picture, no issues. Okay, chalo, let's begin. Cluster number 11, okay, that cluster you live. Foreign Exchange Management Act 1999. A quick history, though in the class I take 6 hours of basics only. History, I'll not do 6 hours now because you only have 3 hours. So quickly 10 minutes, I'll tell you why FEMA came. So guys, earlier, if you remember, we were controlled by the Britishers and we did not know what to do, what not to do, etc. So then what happened was, since Britishers were controlling us throughout, and in 1947, suddenly we got independence after years of struggle. Basically, we did not want to let go of, what do you say, the independence that we have. With great difficulty, we have got independence. We cannot let go of it, obviously. So what exactly happened was, in 1947, people, our entire country closed our borders. They're like, no more, because I let outsiders to come and rule over me, and that they ruled over years and years and years. So basically there was no point. So that's the reason why they closed the borders. So basically no money should go outside the country and no money from outside can come into the country. That was the deal, as simple as that. But guys, many years happened and we had to actually ultimately do business and open up our borders slowly and steadily. And two stalwarts, two brilliant people actually created FEMA, right? And those two brilliant people are Sri Manmohan Singh and who's the other person who is also called as the unsung hero, Narasimha Rao. Narasimha Rao Garu, he was the Prime Minister of our country. So when Narasimha Rao and Sri Manmohan Singh was the finance minister in 1991. You all know what happened. LPG effect, liberalization, privatization, and globalization. So that's what they did. And during this, what they did was they ensured that earlier it was Foreign Exchange Regulation Act, whereby everything was prohibited, some things were allowed. Then what happened? Foreign Exchange Management Act. The seeds were sown in 1991 itself to open up our country to foreign investment, but the seeds became a plant in 1999. And then they said, earlier, what did I tell you? It was everything is prohibited unless some things are allowed. Then it became everything is allowed unless some things are prohibited. Some things were prohibited, other things were allowed. So that, my dear friends, became Foreign Exchange Regulation Act, became Foreign Exchange Management Act in 1999. So how it came, when it came, all those things are not needed for us. We should only see what is there for the examination, because now examination is around the corner. We can't sit and do everything now, unfortunately. And since it's like more of a revision session, we'll try to do. But even if you have not studied, FEMA at all, no problem. You can follow the classes, okay? Even if you have not studied FEMA in your life, not an issue. So these classes are more than sufficient to cover, even if you have not touched FEMA at all in your life. So it's okay. Let's see one by one. Are you with me? All of you with me, buddies? Come on. Yes, you can just put a thumbs up. Are you with me, all of you? So let me just get full screen here. Oh, so is the screen visible to all of you? Yeah. Okay, cool. Super. Let's see. So here I'll write. You can probably check it out. Cool. So moving on, let's see one by one. There you go. So first and foremost, what I should see, let me just open a few charts as well. I'll give you time to take pictures of it because we do not have the time to sit and study everything, buddies. In the sense, you do not have the time to sit and write down all the points, but no problem. So basically, Section 3 of FEMA says no person shall deal in foreign exchange or foreign security unless allowed. So basically, they are trying to tell Section number 3 says no person can deal in foreign exchange. No person can deal in foreign exchange or no person can deal in foreign security unless it is allowed as per the rules. So rules should allow foreign exchange and foreign security. We need to understand now what do you mean by foreign exchange? We need to understand what do you mean by foreign security, all those things. So if you see, I will take the ISM now. I'll just open the ISM. This is your ISM. So basically all these things are there. Your entire thing syllabus is this only. That's all. One is definitions, little bit of definitions you should see. Then two things, guys. Current account transaction, then capital account transaction. Current account transaction means what? Capital account transaction means what? All those things. Need for the act, I told you quickly. All this they will not give. So basically, what are the features of the law? It will regulate the transaction between resident and non-resident. There are certain transactions called capital account transactions. There are certain transactions called current account transactions. Some are allowed, some are not allowed. All that I need to do. Very, very simple. So basically, how to read FEMA? First, we should read FEMA Act. We should read the rules and regulations, then the notifications, circulars, master directions, FAQs. Everything is given in the material, so don't worry. You don't have to worry anything. So for our broad structure, you leave. So for our syllabus, basically only 6 sections are there. That is your capital account transaction, current account transaction, and other things. So the general rule starts off with what? It says that no person shall deal in foreign exchange or foreign security. No persons will deal with foreign exchange and foreign security, right? So foreign exchange means what? So basically, guys, foreign exchange means foreign currency. Foreign exchange means what? Foreign currency. Same dialogue in your material, it's there. Do not worry. Open your institute material. You see the definitions here. Check all that we see. Let's come to directly foreign exchange. We have to see that only, see here. Foreign exchange means foreign currency. I am seeing the ISM. Are you also seeing the ISM? Page number 3.6. ISM page number 3.6, all of you. Foreign exchange means what? Foreign currency. Foreign exchange means foreign currency. Fair enough. Suddenly, I should go to the previous one. What do you mean by foreign currency? Amazing definition. Foreign currency means currency other than Indian currency. Super. So first is what? What do you mean by foreign exchange? We know, right? Foreign exchange means foreign currency. And what is foreign currency? Foreign currency means any currency other than Indian currency. Other than Indian currency. So if you see, that's all there is to it. Simple dialogue. Anything other than Indian currency will be called as foreign currency. That's about it. So if you see, what do you mean by foreign currency? This is what they have given. Apart from that, we need to also understand what do you mean by foreign currency and what do you mean by Indian currency. So let us check the other definitions also. So all these are all the definitions that are given, simple definitions only, but you check here. Foreign security, and here you see, check this, and includes deposits, credits, and balances payable in any foreign currency. Fair enough. Expressed or drawn in Indian currency, but payable in any foreign currency. I'll explain everything with examples. Then you see here, payable persons outside India, but payable in Indian currency. So to dissect this, one example we will take, check this. This is the definition of foreign currency. See, everyone can see, I guess. Expressed or drawn in INR, payable in INR. So you can take a picture of this or you can quickly write this down or take a picture, that's fine. Expressed or drawn in INR, dollar, INR, dollar, payable in INR, INR, dollar, dollar. All conditions are fulfilled. If the currency is expressed in rupee, payable also in rupee, it is obviously not a foreign currency. Yes or no? It is expressed also in rupee, payable also in rupee. Is it a foreign currency? No. Is it a foreign currency? Absolutely not. Next, expressed in dollar, payable in rupee. Is it a foreign currency? Yes, because it can be expressed in a foreign currency, but payable in Indian currency. Yes, it is. Third one, expressed in rupee, then payable in dollar, yes, for that also is a yes. Last one, both expressed also in dollar, payable also in dollar. Everything will be called as foreign currency. Understood? So column number second, third, and fourth will be foreign currency, friends. Whereas the first one will be Indian currency. Everyone with me, yes or no? Give me a thumbs up or give me a yes, give me a no. Come on, all of you there in the chat window or just thumbs up. Yes, everybody understood the concept. It can be expressed or payable in what currency? It can be expressed in foreign currency, payable in Indian currency, expressed in Indian currency, payable in foreign currency, expressed and payable both in foreign currency, doesn't matter, right? It doesn't matter. So it can be any of these things. Very, very simple. Moving on. So what is the status of this? This is a no. First one, it is a no. Then in all the three cases, it would be a foreign currency. It would be a foreign currency, right? Now let's see the definition. So basically same thing is given here. You see, payable in any foreign currency, expressed or drawn in Indian currency, payable in foreign currency. This is drawn outside India means obviously it will be drawn in foreign currency, but payable in Indian currency, everything covered. So simple, if you take this into account, this will be my foreign currency. As simple as that, buddies. Moving on, I'm just doing the important definitions. Foreign currency done, foreign exchange done. Now, what do you mean by, basically, we have discussed that you cannot trade anything either in foreign currency or foreign security without the permission. As simple as that. You cannot do it without any permission. You have to take permission. As simple as that. So now let's see this. See this definition, foreign security important. I'm only doing important definitions. Foreign exchange, important definition. Foreign exchange means foreign currency. Foreign currency means other than Indian currency. As simple as that. Moving down below. Below, if I move down, it is what? Foreign security. Foreign security means what? Any security in the form of, you see, any security means exhaustive definition in the form of shares, stocks, bonds, debentures, or any other instrument. The main thing is this only. Denominated or expressed in foreign currency and includes securities expressed in foreign currency, but redemption or any form of return or dividend is payable in Indian currency. So guys, foreign security should be denominated or expressed in foreign currency. For example, if I buy bonds or shares from Tesla, if I buy bonds and shares from any foreign company, Apple Incorporated, for example, is it denominated in foreign currency? Yes. Is it expressed in foreign currency? Yes. But is it ultimately, when I'm getting the return to India, dividend, etc., obviously it will come into India. And when it comes into India, I will convert it to INR, right? So that's why it is payable in Indian currency in the end. Payable in Indian currency at the end. Got it? So still we have need more and more examples for this. So for foreign security, check this out, guys. Means any security. But guys, it does not include bills of exchange. It does not include what? Promissory note. Because if you see, again, let me come back here. You see, foreign security means any security. Foreign security means any security. And if you see here, it is not given the security definition, but yes, they are not given, but security definition does not include what? As I mentioned, it does not include foreign bills of exchange and promissory note. So here I've written down foreign security means any security. And the security definition, if you go, it will not cover bills of exchange. It will not cover promissory note. These are negotiable instruments. And you see, these three things we have to write. Take it out. Expressed or denominated in what currency? Redemption, that is return of capital in what currency? Return, that is interest or dividend in what currency? So if you see here, the dialogue here, but where the redemption or any form of return, such as interest or dividend, and denominated or expressed is the key here. So here I've made everything, guys. Expressed or denominated, redemption, return of capital, and return. So what does it say? All combination. See, first one, denominated in rupee, rupee. Redemption in rupee, interest in rupee. Then all combinations. Redemption in dollars, interest in rupee. Redemption in rupee, interest in dollar. Redemption in dollar, interest in dollar. Whatever you do, is this a foreign security? Yes or no? No. Why? Because foreign security should be always denominated or expressed in foreign currency. In this example, the first column, or rather the first row, has denomination in Indian rupee. So is it a foreign security or Indian security? Answer, guys. Come on. Foreign or Indian? You can just write F or I. Foreign or Indian? Come on. Foreign or Indian? Yes, it is Indian. Why? It is denominated in Indian rupees. It is denominated in Indian rupees. That's the reason. Very good. It is denominated in Indian rupees. Denominated in Indian rupees. Very good. Yes. So basically, guys, you can take a picture of this. Hold on. Quickly click a picture of this, all of you, or you can write down, but I would suggest click a picture quickly. Many things to do. That's why. Done. Super. Next, I will go little this side and do other things. Here you see, if it is denominated in foreign currency, but this can be any combination, I don't care. Rupee, 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 dollar, dollar. Any signal, anything, I don't care. Then, guys, it will be a foreign security. Why? It should be denominated in foreign currency. That's it. Denominated in foreign currency. Should be denominated in foreign currency. That's all there is to it. Very, very simple. Right? So what is foreign security? Here, denominated in Indian currency is not a foreign security. It should be denominated in foreign security. Done. So that is the next part of the important definition. So FEMA will come for around maybe 4-5 marks, guys. You never know. Around roughly earlier, always used to ask for that only. That same thing may come this time also. First time ever they're asking in our May attempt. So let's see how long it will come, how much it will come for. Let us check it out. No problem. So ideally, in my opinion, same thing generally, same, what do you say? Thing will come around for 4 marks. Moving on, again, one more important definition, guys, is this is the most important definition. Mark it as very, 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 very important. If you study like this, no, if you study from this particular definition, you will stop studying CA because it is little irritating. So we'll study in a different way, right? We'll study in a different way. So there you go. Resident in India, very, very important definition. So before that, some differences between Foreign Exchange Regulation Act and Foreign Exchange Management Act. That is there in the first para. FERA was a criminal law. As I told you, we wanted to protect our country. We didn't want money to go out of the country. So it was a criminal law. FEMA is a civil law. In FERA, there was no type of transaction covered, but here they're given two specific things: capital account transaction, current account transaction. And what was the dialogue in FERA? Everything is prohibited unless permitted. Everything is prohibited unless permitted. But here, what in FEMA? Everything is permitted unless prohibited. Everything is permitted unless prohibited. And here in FERA, it was rigid. In FERA, it was rigid. In FEMA, you give proper disclosure, no problem. You give proper disclosure, then absolutely no problem. Everything will be sorted. Everybody with me? Did you understand difference between FERA and FEMA? If yes, kindly take a picture. Kindly take a picture. All of you guys, thumbs up, thumbs up. Cannot sleep. Good morning. Get up, get up, get up. Thumbs up. Yes, no, something you tell. Good, good, good. Somebody has raised your hand. Cool, cool, cool. No problem, no problem. Done, guys. Super. Done. Done, guys. Next, moving on. So now most important definition, that is definition of person resident in India. Let's do it. Person resident in India. Very important definition, buddies. Person resident in India. Let's see here. Very important definition. You forget your income tax definition and all here. This is a different definition. I will explain first, then I will give you time to take picture, then you take picture. I will explain first, don't worry. Don't read the Bare Act, don't read that notes and all, don't read, just stick to this, okay? Yes. Coolly will understand, okay? First, basically you need to understand that, is the screen clear? Screen is clear? Yeah. Okay. Check it out. Resident in India depends on period of stay and purpose of stay. Period of stay should be in the previous financial year. Purpose of stay is in the current financial year. Our current financial year is 23-24, obviously. What is the previous financial year? 22-23. So in the previous financial year, what should it be? The period of stay. And in the current financial year, I should see the purpose of stay. Right? Always like that. Did I stay for more than some number of days in the previous year? And in this year, why did I come? Or why am I here in India is the question. Right? So period of stay in the previous financial year, purpose of stay in the current financial year. Period of stay, previous financial year, purpose of stay, current financial year. Do not read the material there. ISM, they made a mess of it. Just stick to this chart. That's all. Okay. Coolly. All Indian citizens who stayed in India for more than 182 days in the previous financial year. All Indian citizens who stayed in India for more than 182 days in the previous financial year. And what is the purpose? Did they go out of the country? No, who never went abroad in the current financial year. Are they residents or non-residents? Residents. These three people are called residents. That's what we are doing. These three people are called residents. Who are residents? First one, all Indian citizens who stayed in India for more than 182 days. When? In the previous financial year. In the current financial year, who have never went abroad. Example, CA students, all of us. Were we dying in India last year? Yes. How long? 365 days. This year, have we gone anywhere? No. Sir, out of my city only, I did not go. I'm doing CA. What I'll do abroad? What I'll go abroad? Right? So, are you an Indian citizen? Yes. So, best example is what? Us. This is all of us, CA students. Got it? All Indian citizens who stayed in India for more than 182 days. When? In the previous financial year. And in the current financial year, who never went abroad in the current financial year. Understandable? Everyone with me? Yes or no? Yes or no? Please take a picture. Please take a picture of the first point. Let me just clear everything so that nice picture will come. Everybody with me? Yes or no? Thumbs up, all of you. Yes. Good. Take a picture. Hey, you're sitting. Somebody is riding and all and saying, hey, don't ride and watch, da. Got it? Next. Second one. So all our fellows, CA fellows, how much? All Indian citizens who stayed in India for more than 180 days in the previous year and who never went abroad in the current financial year. What? Resident. Next one. Any person who stayed in India for more than 182 days in the previous year. and who went abroad in the current financial year for other than the three purposes is a resident, mind you. Any person who stayed in India for more than 182 days in the previous year, any person, but who went abroad in the current financial year for other than the three purposes, means he should not have gone for business or vocation, who should not have gone for employment, should not have gone for some other purpose where the period of stay is indefinite. He will be a resident. For example, this is you only immediately after clearing CA. After clearing CA, first thing you want to do is what? Go on a world tour. You want to tour the world. Now tell me, have you stayed in India previously for more than 182 days? Yes. Why? Because you were doing CA. Current year, why are you going? Current year, where are you going? Are you going for business or vocation? No. Are you going for employment? No. Are you going for purpose where the period of stay is indefinite? No. What are you going for? You are going only for trip. So are you a resident? Yes. Are you a resident? Yes. Thailand it seems. Hey, right? Yeah, Thailand only. Correct. So what do you think? Are you resident or non-resident? Resident. Very good. You go to Thailand, you will be resident only. You are right. Next. What is it? Any person who stayed in India for more than, so basically first one is what, guys? You are a CA student. We are CA students, we are residents. Second one, I finished my CA. Last year I was staying for more than 182 days in the year, and this year I've gone for other than the three purposes. I've not gone for business, I've not gone for vocation, I've not gone for employment, I've not gone for some other purpose where the period of stay is indefinite. Let's take some other examples. You tell me the answer. I have stayed in India last year for more than 182 days. This year have gone for business outside to have a business project. What do you think? Resident or non-resident? Resident or non-resident? Non-resident. NR. Good. Second example. I have stayed in India for more than 182 days in the previous year. I finished my CA and immediately I have got employment in Dubai. So today I am leaving for Dubai. Resident or non-resident? Resident or non-resident? Non-resident. Very good. Very good. Very good. Very good. Third one. I am a resident. I am a person who stayed in India last year for more than 182 days. My grandmother is sick on her deathbed. My grandmother always lived in Australia. I am going there to look after my grandmother and I don't know when I'll come back. So I've applied for a travel tourist visa only. Then I'll have to keep on extending because I don't know. I've taken permission. Resident, non-resident? Non-resident. Period is indefinite. Correct? Non-resident. Did you understand? So any person stayed in India. Now one more question. Cricketers, no commentators. Commentators have come to India. Are they resident or non-resident? They are non-resident. Why? Did they stay last year for more than 182 days? No. But you see the third one. All NRI and foreigners. All NRI and foreigners who stayed in India, which year? Last year for more than 182 days and who came to India in the current financial year for the three purposes. Last year they stayed for more than 182 days. But why have they come to India? For the three purposes, means to do business or vocation in India, employment in India, or some other purpose where the period of stay is indefinite. So Matthew Hayden, or let's say John T. Rhodes. John T. Rhodes stayed in India last year for more than 182 days. He has come to India because he is now a chief fielding coach of IPL, some IPL team of Mumbai Indians. He is a chief fielding coach of Mumbai Indians. Tell me, resident or non-resident? Answer. John T. Rhodes has stayed in India last year for more than 182 days. This year is coming to India for taking up employment as coach. Resident or non-resident? Resident. Foreigner has come to India and he has stayed last year for 182 days, but he has come for 7-month trip. He's come for a trip, 7 months. What do you think? Non-resident. Very good, very good, very good. He's a non-resident. Why is a non-resident? Because he's come for a trip. He's not coming for business, vocation, employment. Correct? Next, some other person. John T. Rhodes or Mr. John. Mr. John has come to India. Mr. John has come to India and he stayed last year for 182 days and is continuing to stay for more than 182 this year also because he's come for his auntie's treatment. He's come for his auntie's treatment. Resident, non-resident? Resident. Very, very good, guys. Very, very good. Very good. Understood? There are 2 exceptions to this. We will see. Understood? Yes or no, all of you? Let's say Mr. Bangwa. Mr. Bangwa from Kenya has come to India. He has come to India for the first time to study. Resident, non-resident? Non-resident. First time only is coming. He's not stayed in the previous year. He does BCom in Bangalore. In Bengaluru, he does BCom. 3 years. Second year. Is he a resident or non-resident? Second year. Has he come in India for business or vocation? No. Employment? No. Some other purpose where period is indefinite? No. So he is also again non-resident. Going by these rules. Going by these rules only. There are exceptions we'll discuss. Don't worry. Right? I have gone abroad for employment or I have gone abroad for studies. I have gone abroad for studies. After CA, I had some foolish desire to do some other thing. MBA I wanted to do for abroad. I'll go. Did I stay in India for more than 180 days in the previous year? No. Oh, yes, sorry, yes. I'm going outside India for what? Am I not doing for other than the 3 purposes? Am I not going for studies? Am I not going for studies? What do you think? Resident or non-resident? First year, first year. This year only I am going abroad to study. Resident or non-resident? Right? That year, as per these rules, that year I'll be a resident. Next year, I'll be a non-resident because I never stayed in India previously for more than 182 days. Understood? Very, very simple, guys. Now, there are exceptions to this rule. We will discuss that. But did you understand this point? Yes or no, all of you? Great. Yeah. Okay. So now, somebody wanted the full screen so that all the 3 you can take a picture. Let me just do that for you. There you go, guys. Take a picture. This is the full screen. There, take. All of you took, yes or no? Super, super. Done, guys. So one more thing. You see, there is an example. I'll show you in our ISM. One second, what happened to this? FEMA notes here. There are two exceptions, don't worry. But before that, I want to show you a video which speaks about residential status. One more question. I've already made a video. You watch the video first, then we will discuss. This is air hostess. Air hostess coming to India and staying in a place. She's from British Airways, let's say. She's staying in a place which is in India. But will that stay be considered as a stay is the question. So let us watch the video, then we'll discuss the exceptions. Okay, coolly watch the video, all of you. It's a good video which I have created. This is for just a sec. I'll show you the video. All of you ready for the video? Yes or no? Yes, very important video. Check it out. After that, exceptions will be discussed. This video will have two errors. This video will have two errors. That error we will rectify after the video. Okay, hold on.
Hi. Today we will understand the meaning of one of the most important concepts in the Foreign Exchange Management Act. Person resident in India. This definition is important to ascertain applicability of the Foreign Exchange Management Act. Two most important things to keep in mind to understand this definition are period of stay in the previous financial year and the purpose of stay in the current financial year. To make it simple,
is it audible for everyone? First of all, is it audible for everyone? Yes or no, please. So that's the most important. You have to understand the video. Yes, decently audible. Super, super. Listen to it, guys. Very important video. Please pay attention.
Let us divide this definition into three legs. First leg of the definition, an Indian citizen who stayed in India for more than 182 days in the previous financial year and who never went abroad in the current financial year is a resident. For instance, if we are checking the residential status of an Indian citizen for the year 19 to 20, we need to check two things. First, we need to see if the person stayed in India for more than 182 days in the previous year, that is 18 to 19. Second, we need to check if he ever went abroad in the current financial year. When both the conditions are satisfied, only then you can call that person a resident of India under Foreign Exchange Management Act. Second leg of the definition. Any person who stayed in India for more than 182 days in the previous financial year and in the current financial year who went abroad for other than three purposes. The three purposes. Number one, business or vocation. Number two, employment. Number three, some other purpose where the period of stay is indefinite. Please note that the keywords here are other than the three purposes. So if the person goes abroad in the current financial year for business or vocation or employment, then he would be a non-resident. We will discuss examples later after discussing the concept. Third leg of the definition. All non-resident Indians and foreigners who stayed in India for more than 182 days in the previous financial year and who came to stay in the current financial year for the three purposes. Number one, business or vocation. Number two, employment. Number three, some other purpose where the period of stay is indefinite. Please note that the keywords here are for the three purposes. So if the person has come to India for business or vocation or employment, then he would be a resident of India, provided in the previous year he stayed for more than 182 days. Let's take examples now. We will start with the example of a CA student in the year 2019-20, who is in his final year of articleship. As a CA student, it is fair to assume that he would have stayed in India for more than 182 days in the previous financial year, that is, 2018 to 2019, and during articleship in the current financial year 19 to 20, he would have never gone abroad. Now, when the same CA student becomes a chartered accountant in August 2020, he decides to go on a world tour. So, in the current financial year 20 to 21, The CA now goes on his first trip abroad. Is he a resident or non-resident? Since he stayed in India for more than 182 days in the previous financial year 2019 to 2020 and is going abroad in the current financial year for other than the three purposes, that is, in this case, a trip, he would be a resident. However, if the same CA went to Dubai on employment in August 2020, he would be a person resident outside India, because even though he stayed in India for more than 182 days in the previous financial year 19 to 20, he went abroad in the current financial year 20 to 21 on employment. The status would be the same if he went for business or vocation as well. Now, if this CA calls his parents over for a few months to help him settle, what would be the residential status of the parents, since the parents stayed in India for more than 182 days in previous financial year and had gone abroad in the current financial year for other than the three purposes, they would be a person resident in India. It is interesting to note that if the CA went abroad for some medical treatment, where period of stay is indefinite, then he would be treated as a person resident outside India. If the CA left India in August 2020 to pursue higher studies in USA, he would be a person resident in India, since he stayed in India for more than 182 days in the previous financial year and went outside India for other than the three purposes. If the studies go for more than a year, or if eventually he gets a job there and settles down in 2022, he would be a person resident outside India, not because of the purpose, but because he did not stay in India for more than 182 days in the previous financial year. Things would get interesting if a newly qualified CA in August 2020 goes abroad for both employment and higher studies. In this case, the residential status for only depends on the visa. If it is an employment visa, he would be a person resident outside India. If it is a student visa, he would be treated as a person resident in India for the year 20 to 21. If a foreigner came to India for the very first time to see the Taj Mahal, obviously he would be a person resident outside India, since he did not stay in India for more than 182 days in the previous financial year. However, if the foreigner came to India in May 2020, let's say, to take over as a sales director of a company, even though he came to India on employment, he would still be a person resident outside India, because he did not stay in India for more than 182 days in the previous financial year. However, what would be his status next year, that is, May 2021? He would be a resident in India, because he stayed in the previous year, that is 2020, for more than 182 days, and the purpose of stay in India was employment. What would be the status of a foreign citizen, let's say, from Kenya, who came to India to pursue her studies? As you may have guessed, she is a person resident outside India, since she has not stayed in India for more than 182 days in the previous financial year. If the lady completes her studies the next year and gets a job in India, then she would be a person resident in India, because she stayed in India for more than 182 days in the previous financial year and she now has employment in India in the current financial year. Finally, let's take a very interesting example. Miss Betty is an air hostess with airlines headquartered in Dubai. She flies for 14 days in a month and takes a break for 16 days. During this break, she is accommodated at base, and assume the base office is in Mumbai, India. So, for 12 months she stays in India for 192 days. So, for the previous year, if she had stayed for 192 days, does it make Miss Betty a resident in India? The words resided for more than 182 days implies that compulsive stay in India will not be considered. The word reside implies some kind of permanency. Hence, if an air hostess is accommodated at a base in India during the period of layover, her staying in India cannot be regarded as a period of residence in India. So, as you can see from the above examples, we can conclude that the residential status under the Foreign Exchange Management Act has got nothing to do with citizenship, but it has to do with the period of stay in the previous financial year and the purpose of stay in the current financial year. Follow this faculty on YouTube and discuss queries with the faculty directly on his Telegram channel.
Yes, guys, did you understand? Yes or no? All of you? Okay. Yes, resides is not space, interpreted by Supreme Court. Very good. right? Yeah. So this is the video I had done, I think 2-3 years ago we had done. Right. So let's see. Now, two mistakes are there in that. What mistake exceptions are there, which you have to do now? So air hostess, what is the answer for air hostess? Air hostess basically, since she's staying in India, that stay doesn't mean residing. Hence, she's a non-resident, even though she's staying for more than 182 days. Yes, you're right. It is called compulsive stay. I am not saying out of my own will. Because of my work, it is. That's what it is. Got it? Now, two exceptions are there, buddies. Let's see. So, those exceptions are again important because, they can ask in the examination. Is your ICI interpretation of this? So, right. Both are mutually exclusive, right? One is the period of stay in the previous financial year and the purpose of stay in the current financial year. Both are, so write this down, mutually exclusive. Mutually exclusive means if one applies, other doesn't apply. Means you are either a resident or non-resident, cannot be in between. You're either a resident or you're a non-resident. PF5 means in the previous financial year, I should see the period of stay. I should see period of stay in the previous financial year. And in the current financial year, what I should see? Purpose of stay. In the previous financial year, I should see period of stay. In the current financial year, I should see purpose of stay. Fair enough. Next. More than 182 days is nothing but 183 days. So 182 days, more than 182 means it's not 182 days, 1 hour and all that. It is 182 days plus 1 day. Even if you stay for 1 hour, it is deemed to be 1 day. Now, two peculiar things are there here. First one, person coming to India for business or vocation or employment in the current financial year. Tell me, resident or non-resident? Person coming to India for business or vocation or employment in the current financial year, resident or non-resident. First time is coming to India. First time is coming to India as per the law, non-resident. But as per FEMA, it is person resident outside India for sure. Why? In the last year, he has only stayed for 0 days. But ICAI says, ignore that 182 days. Because the purpose is employment. Very, very important change. You are a resident. ICAI says you are a resident. Right? So you should follow ICAI. Nothing can be done. Person coming to India for business or vocation or employment in the current financial year. Previous financial year, did I stay for more than 182 days? No. As per FEMA, you are a PROI. PROI means person resident outside India. As per FEMA, you are a person resident outside India. But ICAI says ignore. You will be a person resident in India. ICAI says ignore. You will be a person resident in India. Got it? All of you? Yes. That is for one thing. Yes. ICAI master stroke only. On the other hand, here come the second one. So this is the first exception. Everybody understood first exception? Everybody understood first exception? Thumbs up, thumbs up, thumbs up, thumbs up. Everybody understood? Okay. Yeah, take a screenshot. Take a screenshot quickly. Take a screenshot this quickly. Take. Second one, I'll explain. This is ICI's amazing interpretation. Done the screenshot. Okay. Next, this side. See here. Student who stayed in India for more than 182 days in the previous year. That is you guys. After CA, you wanted to do higher studies. So you are going abroad for higher studies, MBA and all you want to do. After dying here for 5 years, you want to let go and go abroad for more than, you have to go abroad and want to study there. Did you stay in India for more than 182 days in the previous year? Yes. Are you going abroad for higher studies? Yes. In that particular year, are you resident or non-resident as per FEMA? As per FEMA, you tell. Resident or non-resident? Yes, you are a resident. So as per FEMA, you are a PRII, person resident in India. As per FEMA, you are a person resident in India, obviously. However, RBI circular, guys, RBI circular 45 dated 8/12/2003. You guys were born or not? 8/12/2003. Probably in the year you were born or not born, whatever. Some of you bachas, kids are here. Some of you are not bachas, right? I was one small bacha in chaddi banyan, right? They're not so small after all. Anyway, yes. So circular dated 8/12/2003. What did it say? Since students work there, their logic is sound. Since students work there, all because when they are going for studies, no, they will not get money, guys, have to earn. All my cousins who have gone abroad, right? They've all worked there. They have worked as baristas in cafes and all those things. So they have to work. So they are telling, RBI is telling, since students work there to supplement their studies, cost of living generally is high. Hence, it is treated as business or vocation. Imagine, deadly. Treated as business or vocation, and they are called what? PROI in the year that they leave only. In the year that they leave only, they are called PROI. Everybody with me? Understood this? Yes or no? Ideally, it is PRII, resident, but it is treated as PROI. Everyone with me, guys? Come on. Logic, did you understand? All of you. Great. Super. Done. That is the definition of what? Resident. Very simple. Resident of individuals. Resident of individuals. So all this that we saw now, all this, not this, sorry. All this resident definition of individuals, that is on, that is to it. So apart from that, some additional points here. Check it out. The words resided for more than 182 days implies that compulsive stay in India will not be considered. The word reside implies permanency. Therefore, where an air hostess employed outside India is accommodated at a base in India during the period of layover, her staying in India cannot be regarded as a period of residence in India. Very, very simple. Moving on. Citizenship is not relevant for determining residential status, guys. You need not be, if you are Indian citizen, not Indian citizen, I don't care. It is a residential status in FEMA, is not like income tax or any other law. It is purely based on the residential status, the resident, how long you're staying here, not the citizenship. Definition of resident and non-resident are mutually exclusive. As I told you, you can either be a resident or you can be a non-resident. The definition under FEMA is based both on period of stay, unlike, and purpose of stay, unlike Income Tax Act, which speaks about only the period of stay. Purpose and all, they don't care if you remember. Period of stay is based on preceding financial year. Purpose of stay is the current financial year. The stay in India is more than 180 days, so one has to remember as 183 days. Under FEMA, the residential status can change even on a daily basis, because now you go abroad for studies, and then you come back tomorrow because you didn't like it. You go there for work, and in 2 months you come back. So residential status can change every single day in FEMA because purpose is involved here. That's why. 2 exceptions already discussed. What about residential status of a body corporate, guys? Residential status of a body corporate. Any person or body corporate incorporated in India will be what? Resident. So tell me, Reliance Industries incorporated in India, resident or not? Resident. You want a screenshot of this? Take. Sorry, take it. Let me just 1 second, guys. This is like revision material. Take. Done. Moving on. Exactly 180 days is normal, guys. Should be more than 180 days. Exactly 180 days is obviously, since he's not staying for more than 182 days, exactly 180 days, you'll be a non-resident. Then, for Reliance Industries, since it is incorporated in India, doesn't matter, it is a resident. Next, an office, branch, or agency in India owned or controlled by a person resident outside India also is a resident. For example, Tesla Bangalore is being controlled by Tesla Incorporated US. Tesla Bangalore is an office, branch, or agency. In India, it is controlled by a person resident outside India. I don't care, it is still a resident. So Tesla Bangalore is a resident. Reliance Industries is a resident. Tesla Bangalore is a resident. On the other hand, Hamleys UK. Hamley, the toy company, UK. It is incorporated outside India, but being controlled by Reliance Industries in India. So is Hamleys a resident? Yes. An office, branch, or agency outside India, Hamleys, but owned or controlled by a person resident in India. It is a resident. It will be a resident. So it is not place of incorporation predominantly, it is from where it is being controlled. So if it's incorporated in India, definitely resident. Anything outside India controlled by a person resident in India, like Hamleys, resident. On the other hand, if it is in India, but controlled outside India also, I don't care, it is a resident. All three are residents. 3 different examples I have given. So please check this example. Toy Limited. It's given by the ISM also, but read it, you'll understand. It is a Japanese company. It has several business units all over the world. Robotic unit headquarters in Mumbai, branch in Singapore. Headquarters at Mumbai controls the Singapore branch. What would be the residential status? Since it is a company outside India, but controlled by company in India, controlled from India, it is a person resident in India. Person resident in India. Got it? Very, very simple. Moving on. All these definitions and all we have seen this. Now, you see here again coming back to our transactions. Moving on, guys, in FEMA. Residential status, that's all. Next. Just let me see. Yes, now let's come to another important area, capital account transactions and current account transactions. Very, very important. Capital account transactions and current account transactions, extremely important area. Capital account transactions and current account transactions, very important area. So what are capital account transactions? What are current account transactions? It will be as per the current account, capital account transaction rules. One by one, coolly we'll study with many examples so that there is absolutely no confusion in anything. So let me just put that particular chart I wanted to show you. 1 second. Sorry. Yeah. So guys, capital account transactions. You should read it with the regulations, right? There are two schedules, schedule number 1 and schedule number 2 in capital account transaction. What are capital account transactions? We have not discussed. We will discuss. Then in current account transactions, there are 3 schedules. There are 3 schedules. Okay. In capital account transactions, there are 2 schedules. But in that 2 schedules, some are freely permissible, some are prohibited, and some are restricted. This is the structure, overall structure. So then in current account transactions, there are 3 schedules plus 1 extra item. There's 1 extra item. Okay. Everything will study coolly. You have to stay with me. Okay. Yes. Everything we will study. Control means yes, more than 51%. More than 50% basically. Are you with me, guys? Let's first one by one study what is current account transaction, what is capital account transaction. Then we'll come to this chart. So check it out. First, take a screenshot, then I'll explain. Take a screenshot, capital account transaction and current account transaction. Done? Yes. Let's see. What do you mean by a capital account transaction, guys? Capital account transaction is something that alters the assets and liabilities. Capital account transaction is something that alters the assets and liabilities, including contingent liability outside India of a person resident in India. Sir, mother promise, I didn't understand. No problem. Or it alters the assets and liabilities in India of a person resident outside India. A person resident outside India. So what should it alter? Asset and liability, including contingent liability outside India of a person residing in India, or it should alter the asset and liability in India of a person residing outside India. Let's take an example, right? Let's take an example. So everything is capital account transaction. Other than this, it is current account transaction. That's all. Let's take an example. So what does it say? Here, let me talk about this. Of a person residing in India, it is altering the asset or liability outside India. Outside India. Let's say Sheila auntie, right? Sheila auntie is one auntie, very hep auntie she is, right? Right. So Sheila auntie wants to buy, correct? Wants to buy what? Wants to buy, let's say, Taj Mahal. So Taj Mahal, let me try drawing Taj Mahal. Sorry. Guys, if it doesn't look like Taj Mahal, assume, guys. Assume this is Taj Mahal. Ting. Okay. Sheila auntie wants to buy Taj Mahal. Okay, she buys also, but she takes bank loan from ICICI Bank. Tell me, she takes back this thing loan from which bank? ICICI Bank. Correct? Yes. Now, question is it altering any asset in India? You see this dialogue. Alters assets and liabilities outside India of a person residing in India. Sheila auntie is a person residing in India. My question to you, is it altering any asset? Taj Mahal is an asset. Loan is a liability. Is it altering anything outside India? Is it altering anything outside India? No. So is it a capital account transaction? No. Is it a capital account transaction? No. 1 second, let me make this full screen. I hope you're still able to see. So is it a capital account transaction? No. Not altering anything. Next. Sheila auntie. Wants to buy Qutub Minar. Wants to buy Qutub Minar. Correct. If it doesn't look like Qutub Minar, deemed Qutub Minar. So wants to buy Qutub Minar. This is in India. But she takes a loan from Royal Bank of Scotland in the United Kingdom. Tell me, is it altering an asset in India? Sorry, asset outside India? No. But is it altering a liability outside India? Yes. Is she a person resident in India? Yes. Is this a capital account transaction? Yes, capital account transaction. Everybody with me? Capital account transaction. Understood? In this case, is it altering an asset in India? No. Sorry, asset outside India? No. Liability outside India? No. Not a capital account transaction. Here, Qutub Minar, asset outside India? No. Liability outside India? Yes. Capital account transaction. Next. Sheila auntie once was skydiving. So she jumped from the plane. This is Sheila auntie. Jump from the plane. Yay, full on, smiling. Parachute and all was there. Parachute. Jumped. When this she jumped in Dubai. When she was jumping from Dubai, below she saw the Dubai Palm Island. I have jumped from there, so I know like this it is Palm Island. From up she saw. She's like, now I want to buy one property here. So one house. Shah Rukh Khan also has one house actually. Next to this one house Sheila auntie bought. Rich female she is. So Sheila auntie bought a house in Dubai. And she took a loan from ICICI Bank to pay that. Tell me, is it creating a liability outside India? No. But is it creating an asset outside India? Yes. Is it a capital account transaction? Yes. It's a capital account transaction. Are you with me, all of you guys, one by one? Yes or no? Yes, very good. Fourth example. So this time Sheila auntie went to Egypt and she saw pyramids. She had watched Dune movie, became full excited, went to Egypt. She was dancing in the desert and she saw pyramid. So she wanted to buy the pyramid. So this is an asset outside India. There, Egyptian Mummy Bank. One bank was there. It's not there. Suma, I'm creating the name. Egyptian Mummy Bank. So from Egyptian Mummy Bank, everyone knows just like mummy is there. From Egyptian Mummy Bank, she took a loan. Now tell me, is the asset created outside India? Yes. Is the liability created outside India? Yes. Is this a capital account transaction? Yes. Is this a capital account transaction? Yes. Both are capital account transactions. Are you with me? Both are capital account transactions. Correct? Very simple. So both are called what? Capital account transaction. Very simple. So again, now you tell me anything that alters what? Asset and liability outside India of a person residing in India. Outside India of a person residing in India. Outside India of a person residing in India. Then one more example. Couple of other examples. So one Dubai Sheikh wearing glasses. Yeah, Dubai Sheikh, assume he's a Dubai Sheikh, guys. So Dubai Sheikh is giving loan. Dubai Sheikh is giving loan to Sheila aunty. Correct? Dubai Sheikh is giving loan to Sheila aunty. Fair enough. But the beauty is some guy called PJ. No, what do you say? Resemblance to any person living or dead, just saying. Correct? Person called PJ. Something like this. Some random fellow, guys. Okay. So this fellow is giving what? Guarantee or security to Dubai Sheikh. This is Dubai Sheikh. Correct. This is Sheila aunty. So loan is given by Dubai Sheikh to Sheila aunty, and PJ has given guarantee or security to this. Now, whatever it is, for PJ's point of view, is it creating an asset outside India? No. Sheila aunty is not an asset outside India. Next. Is it creating a liability outside India? Guarantee or security is not a liability as such, but is a contingent liability. Tomorrow, if Sheila aunty does not pay, PJ has to pay. So it is a contingent liability. For PJ, the guarantee security also, is it a capital account transaction? Yes. It is a capital account transaction. Everybody understood? Yes. Got it? Right. Understood? That is what called contingent liability. See here, alters the assets and liabilities, including contingent liability of a person outside India. Outside India, sorry, of a person resident in India. Outside India of a person resident in India. Right? So very simple. So if you see in this example, loan was given by Dubai Sheikh to Sheila aunty, and PJ gave guarantee or security to Dubai Sheikh. Now, for PJ, Dubai Sheikh loan. For Sheila also, if you have to see, Sheila, this loan is a current capital account transaction. It is creating a liability outside India. So for Sheila, it is a capital account transaction anyway. But for PJ also, is it capital account transaction? Yes. Why? Because the liability created here is a contingent liability. Liability created is a contingent liability. Everybody with me? Next, reverse case. Next, we have to see reverse case. Foreigner is coming to India. Right? Foreigner is coming to India. What will happen there? Let's see. I will give you a short break. Don't worry. But let's finish this. At least capital account transaction properly. Some 5-10 minutes break you can take. Yeah. So let's see. Before that, we'll finish it, guys. We'll finish it first. Next. Let's say Mr. Ching Chong. Mr. Ching Chong comes to India. Like this one, Chinese fellow. Mr. Ching Chong. He comes to India. And Mr. Ching Chong likes, what do you say? Taj Mahal. He'll fall in love with Taj Mahal. Taj Mahal. So Mr. Ching Chong comes to India. He is a person resident outside India. Is this an asset in India? Yes. He will take loan from ICICI Bank. Is it creating a liability in India? Yes. You are a person resident outside India? Yes. Are you creating an asset in India? Yes. Liability in India? Yes. This is a capital account transaction. This is also capital account transaction. Why? See now definition. Asset and liability. Asset and liability in India. Asset Taj Mahal. Liability loan of a person residing outside India. Person residing outside India. This is a capital account transaction. This is also a capital account transaction. Got it? Both are capital account transactions. Two capital account transactions for that fellow. Yes, right. Next. Same Mr. Ching Chong. Let's change the name. This is Mr. Ping Pong. Sir Ping Pong comes to India. He's a Chinese fellow. So Mr. Ping Pong is a Chinese fellow. So Ping Pong is a Chinese fellow. This Chinese fellow comes and has Corona beer. Corona beer. He falls in love with Corona beer for obvious reasons. Chinese fellow. Right? So then what he'll do? He will buy this entire Corona company. That company only he wants to buy. Corona Private Limited. He buys. So to buy, however, he takes loan from Chinese Bat Bank. Chumma some name it is. No resemblance to real incidents. Right? So Chinese Bat Bank. Chinese Bat Bank gives him loan and he buys Corona beer. This is in India, assume. Is it creating an asset in India? Yes. Is it creating a liability in India? No, it is outside India. This fellow is a person resident outside India. Is this a capital account transaction? No, because it's creating a liability outside India. But is this a capital account transaction? Yes. Is that a capital account transaction? Yes. Why? It is creating a asset in India. It is creating an asset in India. Everyone understood? Yes or no? Right. Easy, difficult? Easy. What is there in this chiller? Right? All of you with me? Cool. Got it? Simple. Then reverse case, guys. This fellow, Mr. Ding Dong. Ding Dong. He had gone to, he saw the Palm Island. He was also jumping. He saw the Palm Island. He wanted to buy that. Bought a house there. Is this an asset outside India? Yes. Asset outside India. But loan he took from Sheila Cooperative Bank. Sheila Cooperative Bank. This is the logo. Okay. So Sheila Cooperative Bank India gave loan to Mr. Ding Dong to buy an asset outside India. Buying an asset outside India, what do you think? Capital account, current account, it is not a capital account transaction at all. But creating a liability in India, my dear friends. Creating a liability in India. What do you think? This is a capital account transaction. Capital account transaction. It's a capital account transaction. Got it? It would be called as a capital account transaction. Everybody with me understanding? Next. The same example. Mr. Sheila Cooperative Bank has given a loan. Right? Given a loan. And correct, they have given a loan. No problem. One more question. Let's change the example a little bit. Normal lady called Sheila has given a loan. Has given a loan to Mr. Ding Dong. Fair enough. And one more guy. Mr. Ching Chong has given guarantee or security to Sheila. Guarantee or security to Sheila. Sheila has already given a loan, and from Sheila's point of view, she has got guarantee or security. This, my dear friends, for Sheila's point of view, this is a contingent asset. This is an asset that you leave, but this is a contingent asset. Does FEMA recognize contingent assets? Yes or no? Does FEMA recognize contingent assets? No. See here, where is contingent asset? Why? Because contingent asset based on conservatism. We know conservative principle, prudence. Recognize all possible losses, but do not recognize income. Yes or no? As per the conservative principle, it is not taken into account. Got it? Yes. Prudence concept, conservative principle. It is not. What is not taken? The contingent asset is not taken, but it is only contingent liability. So this completes what? Capital account transaction. Anything other than capital account is current account transaction. Anything other than capital account is current account transaction. That is, if I'm getting some interest from that asset, current account transaction. Tell me, I'm getting some interest income from the loan. Is it creating an asset? No. Is it creating a liability? No, it's creating an income. So hence it is what? Current account transaction. So anything other than capital account transaction will be called as current account transaction. You see these examples here. An Indian resident imports machinery from a vendor in UK for installing in his factory. As per accounts and income tax law, machinery is obviously a capital expenditure. But under FEMA, it does not alter or does not create an asset in India for the UK vendor. Yes or no? No. Is it creating an asset here for him? No. He just gave the whatever his machinery, he sold it to India. Is it creating an asset for the UK vendor? No. Does it create any liability to UK vendor? No. Once the payment is made, Indian resident or UK vendor neither owns or is owed anything. Hence, it's a current account transaction. For the UK guy, I'm sending my machinery to the Indian guy. For UK guy, it's not an asset at all. I'm just sold you some property. It's not creating anything. So it's a current account transaction. An Indian imports machinery from a vendor in UK for installing in his factory for a credit period of 3 months. As per accounts and income tax law, for the credit period of 3 months, it's a liability for the Indian importer. Technically, under FEMA also, it's a liability outside India. But under current account transaction, anything other than capital account is current account. So there they say short-term banking and credit facilities. Short-term, not long-term loan. All my examples that I told you, it was long-term loans. Short-term, 2 months, 3 months, 4 months, etc. They are all considered to be current account transactions. Hence, import of machinery is current account transaction. But if it's a long-term loan, that is more than 6 months, then it is a loan. Then it will become a capital account transaction. So you should see what is the credit period. Up to 6 months, no problem. Beyond 6 months is an issue. Okay. Right. So one more example. You want to take a picture of this? Quickly take 1 second. Let me delete all this. Come on, guys, take it. Done. Next, down here. This also take a picture. Illustration 3, take a picture, please. Got it, buddies? Come on. So let's read. A person resident in India transfers $1,000 to his NRI brother in New York as a gift. The funds are sent from the PRI's Indian bank account to the NRI brother's bank account in New York. Under accounts and income tax, it is a capital receipt, if you remember. Or under FEMA, once the gift is accepted by the NRI, no one owes anything, nobody owes anything to anybody. Hence, it is a current account transaction. So what you see in income tax law will be different from what you see here. Both are different. Got it? So with this out of the picture, what is current account transaction? Anything other than capital account transaction. So we will take a short 10-minute break. That's it. Afterwards, we have to discuss important areas of capital account transaction, important schedules of current account transaction, and finish this FEMA. Yes or no? Schedule 1, Schedule 2, Schedule 3, everything we'll discuss. And here this also. Yes or no, guys, all of you? Yes or no, buddies? Okay. So just 10 minutes. 10 minutes. We are at what? 8:38. 8:50 will meet again. 8:50. 12-minute break. 8:50. Quickly, 8:50. All right, buddies, let's begin. Okay, so next part is this, basically capital account transaction with regulations you have to see and current account transactions. So please, you can write this down. Actually, I'll give you time, write this down more than copying, more than taking a screenshot, write this down. Capital account transaction 2E. So capital account transaction has two schedules, schedule 1, schedule 2. So here you write down. Right. One is entire notes I'm making in a different structure, it becomes easy for you. So first we have to talk about capital account transaction, which is current account transaction. Write down capital account transaction, freely permissible. One is freely permissible. Second one is prohibited. Third one is restricted. One is freely permissible. Second one is prohibited. Third one is restricted. Freely permissible means what? Freely permissible means this is section 6.4 and 6.5. 6.4 and 6.5. RBI can never restrict. In freely permissible transactions, RBI can never restrict. That is 6.4 and 6.5. We'll discuss 6.4 and 6.5. So we will discuss separately 6.4 and 6.5. RBI can never ever restrict these cases. Then down 6.2. RBI cannot restrict. Central government also cannot give any restrictions. That is 6.2 proviso. First one is what? In 6.4 and 6.5, RBI can never restrict. We will discuss what is 6.4 and 6.5. Don't worry. Plus one more 6.2 proviso. RBI cannot restrict. CG cannot restrict. Nobody can give any restrictions. And under 6.2 ka proviso, two things are there. Under 6.2 proviso, two things are there. So first one, this you don't write, it's okay, leave it. Just write capital account transaction, three things. Freely permissible, prohibited, restricted. Write down as a chart, it becomes easy. So under freely permissible, 6.4 and 6.5, RBI can never restrict. 6.4 and 6.5, RBI can never restrict. Plus 6.2 proviso. 6.2 proviso. 6.2 proviso, what does it say? RBI cannot restrict, CG cannot restrict. Nobody can give any restrictions. And it has two things, amortization of loan, depreciation of direct investments. Amortization of loan, depreciation of direct investments. You will see that. If I have to amortize a loan or depreciate the direct investments, no restriction is ever permissible. No restriction is possible. Next. What are prohibited? Regulation 4 of Foreign Exchange Management, Permissible Capital Account Transaction Regulation. No need to remember the name. You just say regulations. Regulation 4 of FEMA regulations. Regulation 4 of FEMA Capital Account Regulation. That's enough. So it is prohibited. It is prohibited. Then this side, restricted. Restricted. RBI permission is needed in this case. RBI permission. That is permissible but not freely permissible. First one is what? Freely permissible. Second one is what? Prohibited. Third one is permissible but not freely permissible. Permissible but not freely permissible. So one is what? Freely permissible. Second one, prohibited. Third one, restricted. Restricted means what? Permissible but not freely permissible. So guys, earlier it was given in a section called 6.3. That 6.3 was deleted, but now what is there? You see here, regulation number 3. In that, schedule 1, schedule 2. Regulation number 3. Other things you don't write, just write regulation number 3. Under that, schedule 1 and schedule 2. Regulation number 3. In that, schedule 1 and schedule 2. Got it? So basically, this part is what you have to write, this one. That is capital account transaction. What is current account transaction? Write down here. Current account transaction, 5 items are there. Schedule 1 prohibited. Schedule 2 prior CG approval. Schedule 3 prior RBI approval. Then any other cases fully permissible subject to LRS, liberalized remittance scheme. Schedule 1 prohibited. Schedule 2 prior central government approval. Schedule 3 prior RBI approval. Any other transaction is permissible subject to LRS, liberalized remittance scheme. Liberalized remittance scheme. So if we study all these things, inter-syllabus over. I have made it into a structure. One was definition, then residential status, all that. Next is this. If we study all these things, the inter-syllabus is over. All of you with me, yes or no? Right. One by one, guys, come back here. First, now we know what is capital account transaction. Now we know what is current account transaction. Other than current account, capital account is current account transaction. Other than capital account transaction is current account transaction. One by one, freely permissible. 6.4 and 6.5. 6.4 and 6.5. These transactions are freely permissible. Means RBI can never ever restrict 6.4 and 6.5. So one by one, what is 6.4? What is 6.5? This one. First, take a picture, guys. This one. This is freely permissible. Nobody can touch it. Write this. Take a picture of this. Done. One picture of this. This is 6.4. One more is 6.5. This is next one. This is one more. So guys, think about this thing. Think about this scenario whereby for around 25 years, one guy is living in India. You are only, for example, you till 24, 25, you do your CA. You have a lot of property here in India, which you get eventually. You will acquire everything here because of your heirloom. Basically, your forefathers have left you a lot of property. You move to the USA. From 25 to 55, you work there. And standing when you are at age 45. When you are at age 45. You are thinking about the property that you left in India. Right? This is the second picture that you took. I'm just telling you the scenario. Standing here at age 45, you are thinking about the assets, etc., whatever you had at age 25. This is the second picture that you took. Next, here you are, where you are? You are in USA. What are you doing? Thinking about your property in India. Second picture. In USA also you made a lot of properties because you minted money there. USA also you made a lot of properties. Next story becomes when you are 58 years of age and you have shifted to India now. You are sitting in India. Let's say you are sitting on a wheelchair. God forbid, shouldn't happen. Just an example. Sitting on a wheelchair. Sitting in India at age 58, you are thinking about all the properties in the USA that you made. This is the first picture. Gist of the story is simple. RBI cannot restrict you at age 45. from holding or transferring any asset which is situated in India. You can do whatever you want, freely permissible. My property only. Who is RBI to tell? My property only. Point number one. Point number two. When you are a 58-year-old, when you're back to India and you're sitting in India, RBI cannot interfere with the properties that you made in USA when you were in USA. At age 45, RBI cannot, though you are in USA, RBI cannot interfere in the properties that you made in India when you are 25. Family property or any property. Similarly, at age 58, when you are sitting in India, RBI cannot interfere with the properties you made in USA when you were in USA. That is the meaning of what, guys? Here. Freely permissible. 6465. Correct? Freely permissible. 6465. So let's see the thing here. Check it out. This is the first case at age 45. You are a resident outside India. Yes. Can RBI restrict you? No. Can you hold? Can you own? Can you transfer? Can you invest Indian currency, Indian security, immovable property situated in India? Yes, you can. No questions asked. Because when you're selling it in India, you're drawing the foreign exchange from India to USA. Can RBI stop you from doing it? No. Which you had acquired, which you had held, which you have inherited when you were in India. I repeat, you are a resident outside India at age 45. You are thinking about the property you made when you were in India. Can you hold? Can you own? Can you transfer? Can you invest? Yes. Is it Indian currency? Yes. Indian security? Yes. Immovable property? Yes. Is it situated in India? Yes. You had acquired it, you had held it, you had inherited it when you were in India. Yes or no? Can you freely transfer it and move around the foreign exchange without any questions being asked by RBI? Yes or no, buddies? Yes. Freely permissible capital account transaction. I can hold, I can own, I can transfer, I can invest. You are in USA. Is foreign currency coming to India or going out of India? You are selling your property in India and transferring the foreign exchange to USA. Money, US dollars is going into India or outside India? Going out of India. RBI should be worried, but no, freely permissible. Got it? Next. Then 20 years, fast forward. Then you're sitting in a wheelchair, you're sitting like this. Then you're thinking about the past. That is this one. You have become 65-year-old uncle now. Are you a resident in India, 65-year-old uncle? Yes. Can you hold, own, transfer, invest foreign currency, foreign security, immovable property situated outside India? Yes. That whenever you are in acquired, held or inherited when you are outside India in USA properties. Can I sell my USA properties and bring the money back to India now if I want to? Yes. Here money is coming in. RBI will anyway not have a problem. They are freely permissible. 64 and 65. So one by one we are knocking it off, right? Here, did you understand this? 64 and 65. RBI can never ever restrict. RBI can never ever restrict. Right? So, because you cannot, especially anything which is inherited in India, you cannot have any restrictions. It's is as per Indian Constitution, personal liberty. When I was in India, I made a lot of money in India. I acquired many property in India. So when later I am abroad, I can do whatever I want with the property that I inherited in India. No questions asked. On the other hand, When I come back to India after slogging in USA, I want to sell all the property there and bring it back to India. Good only for RBI. Why will they say no? Freely permissible. Next. Then you see this one, next one. 6.2. RBI or CG cannot give any restrictions. Amortization of loans and depreciation of direct investments here. Amortization of loan means I gave a loan to some other country. My subsidiary only was there, assume. I gave a loan to that company. And today, unfortunately, they are not paying properly. And I have to write off that loan. So when I'm writing off the loan, I'm losing foreign exchange. Right? Or I'm giving credit facility, I'm giving it in parts, the loan, whatever it is. So when I give a loan and I have to write it off, or if I'm paying it in installments or receiving it in installments, whatever it is, it's a normal business rate, freely allowed, no restrictions can ever be imposed by RBI. Amortization of loan, freely allowed. Similarly, if Reliance makes an investment in a subsidiary in, let's say, Uganda, they made an investment of 100 crore US dollar, 100 million US dollar. Unfortunately, the business in Uganda did not pick up. Unfortunately, the business in Uganda did not pick up. Now that direct investment that I have made, I have to depreciate, write off. So when I am doing it, of course, there will be Forex losses. Is it freely allowed? Yes. Depreciation of direct investment in ordinary course of business is allowed. Nobody can ask me to stop what I am doing. Right? So you see, 6465 is that 45-year-old, 65-year-old uncle story. Then 62. RBI cannot restrict me, CG cannot restrict me for two things: amortization of loan and depreciation of direct investments. Amortization of loan and depreciation of direct investments. Everybody with me? Got it? Yes or no? Yes. Next. Here, prohibited transactions. Prohibited transactions. Regulation 4 of FEMA. Those are prohibited. Whatever you do, you cannot do these transactions. Here. This one. Whatever you do, cannot do these transactions at all. First one, in the business of chit fund. So basically, can you open a chit fund business? What does a chit fund do? Hold on. Just a sec. There you go. Chit fund. Basically, one member every month will pay some money. So if 50 people are there, I'll collect 10,000 rupees for them. I'll get a corpus of 5 lakh. In that corpus of 5 lakh, around 35% of the chit value is set aside. In the remaining, that is 1.75 lakh is set aside. 65%, that is 3.25 lakh. The lowest bidder will get this amount of 3.25 lakh. And 5% of 5 lakh 25,000 is the commission. So you have to bid for it. The lowest bidder will get 3.5 lakh, 3.25 lakh. And out of that 1.75 lakh, 25,000 will go for the commission. Remaining 1.5 lakh is distributed back to the 49 people. So in chit fund, I would have put 10,000, but I may get 10,000 in return, 15,000 in return, 20,000 in return. I may get 3.25 lakh also in return. The lowest bidder will get this thing, chit fund. So now tell me, chit fund business is good in India, but can I allow the chit fund to be sent abroad? Precious foreign exchange, can it go abroad? No. Anybody in the business of chit fund cannot transfer money outside India, except non-resident Indians shall be eligible to subscribe through banking channel to such chit fund on a non-repatriation basis. Means person living abroad can subscribe to Indian chit fund business, but on a non-repatriation basis. Means they should promise that they will never send money back to their country. To their country means wherever they are residing. So whatever is earned here will stay here. It will not go there. That is called non-repatriation basis in the business of chit fund. Next, as a Nidhi company. Nidhi company is a company which is encouraging thrift or spending wisely. So there also, Nidhi company also, any money should stay in India only. There will be a lot of deposits. There will be a lot of other benefits given to you. Can the money be repatriated outside India? No. Third one, no person resident outside India will be allowed in agriculture or plantation activity, because it is the foundation of our country. Agricultural activity happens on a flat land, coconut agriculture, whereas plantation generally happens in a undulating terrain, coffee plantation, tea plantation. You will not call mango plantation. It is mango tree, mango agriculture. Right? Next, in real estate business. Next it is in real estate business. Or construction of farmhouses. In real estate business or construction of farmhouses. What is this? We have already had enough of the British coming and looting us. So I will not allow anybody, foreigner, to come and invest in real estate business or construct farmhouses or buy even our land. Not allowed. But if a foreign company comes and helps in creating gated communities, township, residential, villas, commercial premises, then it is allowed. They are helping me do it. But I will not directly allow them to buy land or directly allow them to buy properties or buy or real estate. Can they create real estate investment trust? Yes. Can they invest in real estate investment trust? Yes. But can they buy homes, etc.? No, not allowed. Right? So basically it cannot be repatriated. Basically, you cannot sell it, take it outside India. Next, you cannot trade in TDR, transferable development rights. What are TDRs? Where your house is there, part of the house government takes over for metro construction. They can't construct half a house for you somewhere else. So they will give the value of this house. Let's say it is around 40 lakhs. they will give you something called as transferable development rights for this 40 lakhs. You can trade that. You can sell it to other real estate people later. So can foreigners or person resident outside India, can they deal in TDR? No, because money will go outside India. Repatriation not allowed. Trading also not allowed. So TDR will be traded between real estate fellows. So if I have a building, if I want to construct one more floor on it, I need to take the permission, etc. I need to pay that extra amount. But in order to pay the extra amount, instead of that, I can buy TDRs from somebody else. So everything is called as a floor space index, FSI. So if I want to build an additional floor, I can buy TDRs from somebody else whose house has been taken over by some government. I can say, boss, you want money, right? So I will buy that TDR you give me, you take the money. With that TDR, I will have a more FSI, floor space index, and I can construct an additional floor on it. Then, lastly, with a citizen or a resident or any entity of the Democratic Republic, People's Republic of Korea, Kim Jong-un. No dealing with anybody from Kim Jong-un. This was a declaration because it is a country which always threatens nuclear war, etc. So it's a country which is like alien, right? So basically not allowed to trade with them. So this list you have to remember. Prohibited list. Take a picture. One is what? Chit. Next is Nidhi company. Then agricultural plantation activity. Then real estate business. Real estate business shall not include all those things. Then transfer in TDR. Then Democratic Republic of Korea. This freely allowed also you take, full you take. 1 second. There you go. Picture. Done. So coming back here, freely permissible 6465 and 62 proviso. Prohibited, regulation 4 of FEM, we have seen now. Next one is what are all are restricted. Guys, very simple. If you understood freely permissible and if you have understood prohibited, other things are restricted. That's all. So you study freely permissible and prohibited and go. Other things will be restricted. Very simple. So if you see the list, in your ISM, they have given actually. Show you. Six, 4, 6, 5, all that we have done now. Permissible. Here, see, schedule 1, schedule 2. This one. See. In this also, what did I tell you? Check it. Here. Schedule 1, schedule 2. Earlier it was part of 6.3. Now that 6.3 has been deleted. So instead of remembering, you can just remember that once you study permissible and prohibited, other one will be restricted. But nevertheless, let's go through that quickly. Here is in our ISM 3.29. Permissible, schedule 1, schedule 2. You see, investment by a person resident in India in foreign securities. So if a Indian buys Tesla shares. If an Indian buys Apple shares, permissible. But of course, you have to take permission from RBI. Foreign currency loans raised in India and abroad by a person resident in India. So I am in India. I borrowed a foreign currency loan. Same. Is it creating a liability outside India? Yes. So is it a capital account transaction, current account transaction? Capital account transaction. Second point. Transfer of immovable property outside India by a person resident in India. I am sitting here. I had bought a property many years ago in UK. I'm selling it today. Can I sell? Yes. Is it prohibited? No. But is it restricted? Of course, you take permission for all these things. Right? Immovable property. So let me show you that. Examples. You see some examples. First one, Schedule 1. Person resident in India is selling his foreign security to person resident outside India. You see, Indian is purchasing Indian depository receipt of Tesla in dollar. So it comes under Schedule 1 allowed. Reverse case. This is Schedule 2, reverse case. Or Schedule 1 only, let's say. Resident in India, NRI, resident in India is purchasing American depository receipts of Infosys in dollars. Schedule 1. Right? Next. NRI is purchasing shares of Infosys. NRI is purchasing shares of Infosys. Is it covered? Yes. You see in this, your investment in India by a person resident outside India in an Indian security. You should study like this. You should study one of this. Sorry. One of this and one of this. So you see your example. Indian buying Tesla shares is Schedule 1. Why? Resident in India buying security outside India. Reverse case. Foreigner, NRI, buying a share Indian company. It is covered under Schedule 2. Schedule 2. Schedule 2. NRI, investing in capital of a partnership firm. Schedule 2. NRI, investing in capital of an OPC. Yes. Can NRI become an OPC? Yes. Resident or otherwise. If he is resident for more than 120 days in the previous financial year, you can be an OPC. I mean, even a foreigner or NRI can, not a foreign citizen, but a non-resident Indian can become an OPC. So if I'm investing in an OPC in India, allowed, Schedule 2. Got it? So take a picture, guys. First picture is still here. Then I'll go down quickly. Examples. Done. I'll go down now. Take pictures of this NRI. Done. Next. Person resident in India is selling an immovable property to any person. Immovable property outside India to any person. So schedule 1 will come. Schedule 1. On the other hand, person resident outside India, foreigner, is acquiring or transferring any immovable property in India to any person. Schedule 2 will come. Just examples. Just click this picture, it's enough. Other things full in depth will not go. This is enough. So an Indian person who has an immovable property outside India is selling that property, no problem. Allowed. Restrictions are there, but allowed. Person resident outside India is acquiring or transferring immovable property in India. So any person, allowed. Got it? Like that. Then if I give any guarantee or security, I told you the example of Sheila aunty giving guarantee security, all those things are capital account transactions. So very simple, guys. If you see this other chart, other things are like CA final level, little bit, in depth is there. That is not genuinely not needed for you. Easy questions only will come, don't worry. But let me just show you the other chart. Let's not complicate things. Let's keep it simple. So, yeah, coming back to this, freely permissible transactions, section 46465, 62 done, prohibited done, restricted done. So, capital account transactions are done. Last part, current account transactions. Current account transactions are coming in schedule number 1, schedule number 2, schedule number 3, and any other things. Correct? Let's see one by one. Half an hour more, we'll finish it off. Done. Come on, guys. Understood till here? FEMA easy or difficult? Yes or no, all of you? Easy, difficult? Easy. We have broken it down and structured in a way it becomes easy. Good. Come on, next. Current account transaction. Section 5 read with FEMA current account transaction rules. Schedule 1 prohibited. Schedule 2 prior CG approval. Schedule 3 prior RBI approval. Any other things is based on the liberalized remittance scheme. Liberalized remittance scheme. One by one. Schedule 1 prohibited. Let's see. Here. Take picture first. I'll show you all schedules. Take picture first. Schedule 1, take picture. Prohibited. Done. Next one. Schedule 2, prior approval of CG. Keep taking pictures. There is down also. Prior approval of CG. This is a structure. Schedule 1 prohibited. Schedule 2 prior CG approval. Schedule 3 prior RBI approval. This they'll ask in the exam. Important. They'll ask you some item of Schedule 2 and say what approval is needed. They'll ask you some item from Schedule 3 and say what approval is needed. Write down. Schedule 2. Then going down. Here. Done. Next. Schedule 3, prior approval of RBI. One by one, I'll show you here 1 second. First do the individual, first full chart you take, and then one by one I will zoom in. Full chart. Just stick to this, guys, more than enough. Don't study anything. Just a sec. Take picture first, and I'll zoom in. Here. Do it individual. Just whatever I've done, study this and go. In this only questions will come, I can assure you. Next, I'll go down. Last part here. Just stick to this chart, more than sufficient. Right? One by one, guys. Come on. So what is it? Schedule 1, Schedule 2, Schedule 3. They will ask this in the exam, important. They will ask you few items from Schedule 1 and say, is it allowed or prohibited? You should remember. Then in Schedule 2, you need to remember what all approval you should take. Then Schedule number 3, prior approval of RBI, whatever it is. So you need to remember that. Let's see one by one. First, Schedule 1, guys, prohibited list. Remittance out of lottery winnings. So guys, if you win the lottery in India, some foreigner comes to India and wins the lottery. Imagine if the lottery winnings, I'm sending it outside India, huge waste of foreign exchange, because it is something which is out of chance or luck. And moreover, it is a complete waste of foreign exchange for my country. Hence, if you win a lottery, foreigner in India, you please spend here only. I will not allow you to take it outside India. So remittance out of lottery winnings, prohibited. Similarly, remittance of income from racing, riding, betting, or any other hobby, any kind of race, etc., whatever earnings, whatever you are winning, everything will be what? Prohibited, not allowed. Third, remittance of purchase of lottery tickets. Similarly, lottery tickets you cannot buy. I am in Thrissur, Kerala now, and here it is allowed. So in my hotel, in front of the hotel, there are 3 lottery shops, one side by side. Imagine. So here it is allowed. So if a foreigner comes to Thrissur, buys lottery, somehow wins also. Can he take the winnings outside? No. Can I purchase lottery tickets? No. And can I repatriate the money? No. Can I buy banned or prescribed magazines? No. Generally, football also betting happens. That is called sweepstakes. So when I had gone abroad, all this in UK and all that, they'll actually properly do betting in football. So all those things is prohibited. Next, payment. So what is first one? Lottery winnings. Second one, income from racing, etc. Then lottery tickets. Then banned prescribed magazines. Then football pools, sweepstakes. All these things, money. I will not use precious foreign exchange for all these things. Next. Payment of commission on exports made towards equity investment in joint venture or wholly owned subsidiary abroad of Indian companies. So if Reliance invests in 100% subsidiary abroad somewhere, and whenever they are exporting goods. I have to pay some amount to the companies. Will I be allowed to pay any amount? No, because what they were doing is, since I cannot pay any commission in these exports only, I used to add the commission rate. They are trying to tell it's your company only, boss. You have made an equity investment. Why should you pay commission to any agent? Because it's a 100% subsidiary. Why are you wasting precious foreign exchange in paying commission on the exports? So no commission will be made to any exports, and that too you are exporting to your 100% subsidiary. What commission you are paying? Sir, he is selling. What he is selling? It's your own company. So please don't waste precious foreign exchange on paying any nonsense commission. Because it's your own company, your own joint venture, your own wholly owned subsidiary. Are you understanding, guys? Logic. Don't mug up anything. No mugging up. Are you understanding the logic? Yes. Next. Remittance of dividend by any company to which the requirement of dividend balancing is applicable. What is this? So if Tesla comes to India, we will manufacture cars in India. Tesla wants to take everything, repatriate back. They will get cheap labor in India. Indian government will tell, bro, why? No scene. I will not allow. You are repatriating everything less dividend. I will not allow. Please come to India, manufacture them, sell some to Indians, export outside. Do not repatriate anything to USA. Keep it in India for, let's say, 7 years. Provide lot of employment. Rotate the money in India only. After 7 years, maybe in a phased manner, you can start repatriation. I also have to get benefit. Boss, you are getting benefit, cheap labor here. What am I getting? You are coming using my resources and exporting everything. No. This concept is called dividend balancing. This concept is called dividend balancing. So when you are doing dividend balancing, within that 7 years, for example, you cannot repatriate money outside the country. That is what it says. See, remittance of dividend not allowed by any company to which the requirement of dividend balancing will apply. Got it? To which the dividend balancing will apply. Got it? Next. Payment of commission on exports under the rupee state credit route. Rupee state credit route. What is this? Indian exporter was exporting to Russia. And when the money is coming into India, rather than that, rubles, Indian used to tell Russian fellow, you buy some property there only in my name. Let the money not come to India only. You buy there only and close it. RBI is allowing export, but they are not seeing any money coming from India, coming into India, sorry. All agents are making a lot of properties there in Russia. So Indian government and Russian government are scratching their heads. They are also importing many things, but they are not able to give anything outside, because of which they are not able to export also properly. And if Russian fellows are exporting, Indians are doing same thing. Indian property in their name, they are buying Indian properties on behalf of their other fellows. Hence, There was a rule made where if an Indian is exporting to Russia, this Russian fellow will immediately deposit that money in a Russian bank owned by the government. And the Indian bank here will give rupees to the Indian. The Russian fellow will deposit that money in rubles in Russian government. Correspondingly, the Indian fellow will do the same thing. Same if Russian fellow is exporting something to India, Indian fellow will give the INR to the Indian bank. Russian government bank will give rubles to the Russian. This, my dear friends, is called as the rupee state credit route. When the rupee state credit route is there, you cannot even exchange any foreign exchange, because when you export something, you are getting India money from Indian bank. Similarly, when you are importing there they are getting in rubles. So if there is any net payable to Russia, it is called a Vostro account, and it is net receivable by India. It is called Nostro account, Nostro and Vostro. So for companies where rupee state credit route applies, can you go ahead and export currency? No. Okay, rupee state credit route not possible. Got it, guys? Now with the advent of WhatsApp and calling, video calling, etc., this concept of callback service and all is no longer there. Basically, where they will give you a missed call and you will give a missed call and they'll call you back. A lot of foreign exchange used to go out. Now nothing is there. Then remittance of interest income on funds held in a non-resident special rupee scheme account. In a non-resident special rupee scheme account, there is interest income. Interest rate is higher and you are not allowed to remit the interest income. It should be deposited in that account only. If you touch that interest income and repatriate, it is prohibited. So what is the prohibited list? Quickly: lottery winning, racing, lottery tickets, sweepstakes, commission on exports, joint venture, wholly owned subsidiary, dividend balancing, callback services, rupee state credit route, interest income. But in this commission on exports, India's two major exports are, my dear friends, tea and tobacco. Major exports of India are tea and tobacco. There I am allowing you commission up to 10% of invoice value. So to Russia, if I am exporting tea and tobacco, based on the invoice value, I can give how much? 10%. Everybody with me? Yes or no? Come on, guys, you have to respond. Yes, no, come on, all of you. Okay. Next, Schedule 2, prior approval of central government. These are very simple. Next is prior approval of central government. Cultural tours. Anirudh Ravichandar wants to go abroad to Malaysia, Singapore, etc. to sing songs. When he's going abroad, he will tell, sir, I have to spend a lot of money there. Please give me US dollars. So the government will tell, okay, boss, I will give you permission. Who will give? Ministry of Human Resource Development, Department of Education and Culture will give him permission to spend money outside India, because a lot of money is being spent outside India to organize everything. But I went to the Ed Sheeran concert in Mumbai. Ed Sheeran coming into India, a lot of foreign exchange is coming into India. Good only, no. But when he's taking all the money and converting to foreign exchange and going abroad, he has to take permission. Next, advertisement in print media, foreign print media, for the purposes other than promotion of tourism, foreign investments and international bidding exceeding 10,000 by a state government and its public sector undertaking. By a state government and its public sector undertaking. What do you think? So here I am advertising in a foreign print media for purposes other than tourism. By whom? State government. So if Karnataka state government is advertising about their jungles of Karnataka in a UK newspaper, in a UK newspaper, should they take permission? No. Why? They are talking about other than. Similarly, Tatas are investing or are advertising about their cars in a USA newspaper. Should they take permission? No, because this permission should be taken only by state government and public sector undertakings. So if your promotion of tourism is there, inviting foreign investments is there, international bidding, where the bidding amount is more than $10,000, etc., no need of any permission. But you are talking to them about, let's say, IPL. You're talking about IPL. Karnataka government is giving, please come support RCB. Anyway, they are Chapadasi fellows, they'll keep losing. Correct? Then what will happen? That is allowed. No tension. That is allowed. Otherwise, no. Otherwise, that will be allowed. Got it? Other than, mind you, other than tourism. Yes. Wow, Kerala. Wow, Keralam. Yes, you're right. Wow, Keralam, incredible India. All these are allowed. Why? Because of promotion of tourism. The key words here is other than. Got it? To take the Ministries of the Finance, Department of Economic Affairs permission. Remittance of freight of vessel chartered by a PSU, by a public sector undertaking. So when I am remitting the freight charges, obviously I have to take the Ministry of Surface Transport. So I have chartered by a PSU, public sector undertaking. So Steel Authority India Limited has exported certain goods outside India. They have to pay the freight of the vessel. Should they take permission? Yes. Payment of import through ocean transport by a government department. Now what I have done, I have called some government department. Kerala government has imported certain iron, etc. from USA. When it is coming into India, coming into Kerala port, Kochi port, they have to pay amount in foreign exchange. Correct? If it is on CIF basis, cost, insurance, freight, who is responsible? Seller only is responsible until the goods reach here. This fellow will charge left, right, center lot of money. He will say freight will be $1 lakh, $5 lakh, whatever he wants, he'll charge. Who will pay? Kerala government has to pay. So you see here, if you are doing it on a CIF basis, cost, insurance, freight, then you have to take the permission of Ministry of Surface Transport. Other than FOB, FAS. FOB is what? Free on board. Free on board. In free on board, who is responsible? In free on board, who is responsible? It is the buyer. He is only responsible for everything. So when he has to pay, he has to bear the expenses. But in CIF basis, the seller, USA fellow is responsible, and I will charge whatever. That fellow will hike up the rate and charge for you. FAS is free alongside ship. So there, until the goods are reaching near the ship, once they remove it and after the ship, after that buyer only has to take care. So in those FOB, FAS, since buyer only is handling all the cargo and loading, unloading, Indian currency you can close. Problem is CIF. CIF, who is charging? Seller is responsible, which means he will hike up the rate. If he hike up the rate, government has to pay money outside India. Yes or no? Are you understanding the logic? Nandini not needed, it's less than 10,000. Next, multimodal transport operators. I am operating via sea, I am operating via flight, I am operating via ship. I am transporting outside India, I have to pay outside India. Yes, I have to take the registration certificate from Director General. Similarly, when I am docking anywhere, I have to pay something called as container detention charges. That also I have to take the permission. Next, our Indian satellites will be there, and Indian satellites will be, very nice, and it will be running properly. But people like Arnab Goswami on 9 PM news will start shouting. Let's say, for example, after shouting, satellite only burst in India. Now, because of that fellow shouting, I have to borrow somebody else's satellite from USA. When I am borrowing that satellite, some space in a satellite, I need to pay some rental amount to USA satellite agency, NASA. Government will ask me why. I have to take permission. See, remittance of hiring charges of transponders by TV channel and ISPs. Ministry of Information and Broadcasting. Right? Next. Of course, Tata Sky, all these people, they should take permission because they're hiring the transponders. Next, remittance of prize money, sponsorship of sports activity abroad by a person other than international, national, state level bodies. The amount involved is more than 1 lakh US. Amount involved is more than 1 lakh US. So basically, it should be what? Prize money, sponsorship. Organized by whom? If it is organized by international agency, like for example ICC, no permission needed. Any amount is allowed. If it is some national team, not needed. If it is Kerala State Cricket Association, no. Only others, local people. You and I, for example. If you and I organize a cricket tournament outside India, if I am spending less than or equal to $1 lakh, no permission. No permission. If I am spending more than $1 lakh, then I should take HRD Ministry, Department of Youth and Sports permission. Very simple. Yes, Bytes, all these fellows, Bytes have become Bytes now. But yeah, earlier, once upon a time, Bytes used to pay Indian cricket team and all that. Yes. If IPL is held in Dubai, still guys, sponsorship is paid to BCCI. Even Byju's is not a good example because Byju's pays to BCCI. BCCI is a national body. That will not come. These are your local championships. Now, somebody, for example, there's an organization called JITO, Jain International Trade Organization. So if they organize something abroad and you donate for that, that is covered here. Because that's not a national body, not a state body, not an international body. It's not an international sports association. That's what I'm saying. Next, remittance for membership of P&I club. P&I club means protection and indemnity insurance. It is a group of all ship owners will coming together and pooling some money, because if tomorrow, if something happens, cargo gets lost, the hull and machinery, hull means the entire skeleton structure of the ship. Any destruction happens there, I need to protect myself. So we are all members, ship owners, we will put some money into the P&I club. So when I'm putting that money, I have to take the approval of the ministry. Got it? So you see, remittance of prize money, sponsorship by a person other than an international body, state body, etc. So if even you are donating it to any sports activity, local championships, then it will come. Last part, guys, schedule number 3, prior approval of RBI needed. For individuals, no tension, guys. There is something called liberalized remittance scheme. Under liberalized remittance scheme, for any purpose, every year, one person will get US dollars 250,000 rupees. US dollars, not rupees, US dollar 250,000 per person per financial year. Only if it exceeds that amount, then I require RBI approval. But for 3 things, even if it, say, if I want to go for traveling, etc., outside India, 250,000 US dollars every year I'll get per person. But if it exceeds that amount, no RBI approval in certain cases. All cases, no approval up to $250,000. If it exceeds an RBI approval, but in 3 cases, even if it exceeds that, no RBI approval. What are those 3? Immigration, medical treatment abroad, studies abroad. Immigration is where I am shifting my country. I am shifting permanently to Canada. Immigration. Medical treatment abroad. I am going abroad for some medical treatment, cancer or whatever it is. So obviously the amount will be more than 250,000, no RBI approval needed. I am going for studies abroad, money will be a lot. So yes, no need to remember the ministry, no need to remember the ministry, don't worry. You can just say what approval needed, central government approval needed, no need of ministry. It's okay. So here guys, what did I tell you? Liberalized remittance scheme, immigration, medical treatment, studies abroad. Very simple. Now, got it? So any purpose, LRS 250,000 US dollars. But if it exceeds RBI approval, but even if it exceeds, RBI approval is not needed for what? Immigration, medical treatment abroad, and studies abroad. Immigration, medical treatment abroad, and studies abroad. You do not need what? Do not need RBI approval. Next, here. Other cases. This is for other than, this is individual. This is for companies. This is for companies. Last part. Over guys, 5 minutes, 10 minutes. Donation exceeding 1% of previous 3 years forex earnings or US dollar 50 lakh, whichever is less. So Reliance is investing in one seat at Harvard University. They will have a scholarship exam. Whoever does well in the exam, they will give that scholarship to him. So is it allowed for them to do it? Yes. Up to 1% of previous 3 years forex earnings or USD 50 lakh, whichever is less, no problem. Up to that amount, no problem. If it exceeds, you require RBI approval. For example, past 3 years forex earnings is 100 crore US dollars. What is 1% of it? 1 crore US dollars. 1 crore US dollar or 50 lakh US dollar, whichever is less, which is less 50 lakh US dollars. If my donation is less than 50 lakh US dollars, no permission needed. If my donation is more than 50 lakh US dollars, then permission needed. Right? Previous 3 years earning. Yeah, sorry, not average. Previous 3 years earning. So my previous 3 years earning is 100 crore. 30, 35 like that. 35, 30, 35, right? Then previous 3 years earning put together is how much? 100 crore. What is 1% of that? 1 crore. 1 crore or 50 lakh, whichever is less, which is less, 50 lakh. I have to see my donation. Donation is less than 50 lakh dollars, no problem. More than 50 lakh dollars, yes. Why am I investing it? Foreign these companies for chairs in a foreign university. One seat in Harvard, one seat in Oxford. Educational institution I'm funding. Or they are doing, what do you say? They're doing what? Technical activity. For example, Reliance is investing in polyester research because they are into clothing also. Reliance is into everything. Reliance is now investing in SIM technology. Reliance is investing in telecommunication projects. Reliance is investing in AI. Yes, everything possible because they are into all businesses anyway. Aggregate, not average. Sorry, by mistake I told average. Slip of tongue. Today I was doing CSR for 2 hours here. They're average. I'm telling and I'm told it here. No guys, it's adding all the 3 years. Okay. Next. Commission. So an Indian wants to buy or a foreigner wants to buy house in India and he will hire a foreign agent. Imagine. There are like that. Foreign agents will buy. Right. So if you see commission paid to whom? Agents abroad for sale of residential flats or commercial plots in India. Imagine. So I have a commercial plot in India. Rather than hiring an Indian agent, I'm hiring a foreign agent because I'm abroad. Unnecessarily I have to pay foreign agent commission. I'm selling the house in India. Money is coming to India. In India also no problem. But outflow is also happening to an agent. I have to balance. So lawmaker says up to 5% of inward remittance you can pay, no problem. Or USD $25,000 you can pay, no problem, whichever is higher. If 1 lakh US dollars is coming inside, what is 5%? 5,000 US dollars. I can pay 5,000 US dollars or 25,000 US dollars, whichever is higher, 25,000. Up to that, no problem. But if you are paying more than that, you should take RBI approval. To take RBI approval. Got it? Simple. Because simply commission, why should I pay outsiders? Next. I am hiring a foreign legal expert, foreign civil construction company to give me consulting. If it is for infrastructure facilities, I can pay up to $1 crore per project. No RBI approval. But if it's exceeding 1 crore, I have to take RBI approval. Similarly, for other projects, not infrastructure, other projects, education projects, for example, up to $10 lakh per project, no problem. Beyond 10 lakh, permission. Whose permission? RBI. All this, please remember and go. Last, any pre-incorporation expenses. In India, I'm starting a company, Tesla, Bangalore, I'm starting. All the money who will pump in? Tesla USA. There'll be a lot of pre-incorporation expenses. Money is coming in. Pre-incorporation expenses have to reimburse to Tesla. Because pre-incorporation expenses, the company only should bear. They're reimbursing something to holding company. How much can I reimburse? Same, 5% of inward remittance of USD 1 lakh, whichever is higher. Here also it is 5% of inward remittance, but it is 25,000, whichever is higher. Here it is 1 lakh, whichever is higher. Here it is 1 crore 10 lakh. Here it is whichever is less. Here it is whichever is less. In other cases, it is whichever is higher. That's all, guys. This is your entire FEMA for CA Inter. Did you understand? Yes or no? Very, very simple it is. Nothing to worry. Got it? Please study this and go. More than sufficient for the examination. Right? Study this only, nothing else. Beyond this, it will not come. Trust me. Decently study this and go. Okay. Thank you so much, guys. Love you all. Give me a fist bump. All of you, fist bump, fist bump, fist bump. Awesome. So again, thank you for the to this SIRC Thrissur for understanding this, for organizing this wonderful session so that we could understand FEMA. Thank you so much, guys. Good night. Today was crazy for me. Some 9 a.m. to 8 a.m. to 10 p.m. 12 hours. Awesome. Not 12 hours. Sorry, 14 hours. Super. Right? Thank you so much. Take care. Good night. Bye. Thank you, guys. I'm going to end the meet now. Thank you so much.